Let's have a look at some head and shoulders formation examples. Head and shoulders top, that is. Now, this is a Euro 15-minute chart, and I typically don't typically don't trade head and shoulders that are of this time span on a 15-minute chart. When I say time span, I mean the amount of time. So, for example, this is approximately a 24-hour period. And I typically won't trade them, but I just want to show you a couple of characteristics so that we can look at kind of the inside of what's happening in the market before we step back and get a larger view. What we have here is, you see this spike high here? There's a couple of things to note about this spike high. This black line separates the days. The green lines here represent pivot point levels. This is R1 and this is R2. This red line represents the central pivot of the following day. And this spike here represents 0-100 hours GMT. And this is an unusual move. And what happens here is Asia rallies, and Asia usually does not exceed the previous day's high. Asia is a new day, correct? And it typically does not take trading or take price up above the previous day's high, less than 50% of the time. Now we see this spike high, but this level right up here, 122.70, 70 to 75, on this occasion it was a key level back in time. And it was quite nice how Asia rallied up here and tested that level. It offered a really good trading opportunity. Then, as you can see, it was quickly rejected, as it most often is when we see these kinds of situations. And price breaks the short-term trend line. It comes back to the last level of support on this short time frame. Then it rallies up for the second attempt, or the retracement of the reversal. And here we see our left shoulder, and we see the right shoulder come up to equivalent of the left shoulder. Now, a couple of points to note. This high right here is very, very, very early Central European time, and this is more core European hours here. It comes up, and look how it fails to hold above the kind of the interim day resistance before falling. And it's an overall head and shoulders pattern that occurs at a distinct level of resistance. And just some nice market characteristics that have been brought into consideration when looking at this price action. As well, we see the MACD is diverging with the head. This is the British pound daily chart, and we see a nice up price swing, a nice rally, and one thing that's very common among head and shoulders patterns and reversal patterns is that when you look back in time, you know, at the time you can identify it as a reversal potentially, but when you look back in time, you see these market characteristics here. They're quite consistent with they're on a smaller time frame, they're reversals, which end up becoming a larger time frame reversal. But look at this, how the market just had this incredible bull run. Then we had the weekend, and on the next day price attempted to go through and failed and was rejected, heavily rejected. And then price fell, and here we see our, in classic British pound US dollar cross form, we see price comes up and hits the backside of the trend line. Now, this was a great opportunity to anticipate a right shoulder, was right here. Now price came down, it came down almost 300 pips before coming all the way back up again. And the fact that this moves up very quickly can offer a good trade. And so it's kind of a double top right shoulder, and you never would have expected this price to come back up, but that's just the nature of trading. And when it does come back up, you simply trade this as you would any other trade, referencing these previous resistance points, as you have seen in some of my trading examples. If you look down this, once this high rejects, and if you look down here, we see continued confirmation of the downtrend, failures to move above and so forth, with the exception of, we see here again more failures, with the exception of this candlestick right here. We see price drifting back towards the neckline, which is something you can anticipate. More often than not, it continues down before coming back to the neckline, but this candlestick right here is very bearish, and then price continues through to the neckline before falling. This is a head and shoulders on a 60-minute chart, and as we see this short-term trend line break, then what it does is it confirms that this is a 10-day moving average, and then also this was a key retracement level seen on a higher time frame. And once we see the break of this trend line, then there's a higher probability that we will see this right shoulder form. In this case, it's a kind of a double top right shoulder, and what's nice about it is you see the failure here. When price attempted to move above these levels, it actually spiked up to these levels but then failed to hold above. You see how the body closed below this level? That's important. And then as liquidity picked up in the market, we saw a fall. This candlestick here is a nice confirmation of the downtrend as price continues to fall. If you were to draw a line across the base of the neckline, there's some correspondence there, but I don't place a lot of value on that. Step 1, Step 2, to the base level of support. Step 3, the right shoulder. Step 4, break of the neckline. And Step 5, retest of the neckline. Now this is a 4-hour chart, British pound, and the swings are quite large. One characteristic we want to notice here is you see here how we have these big swings in an aggressive uptrend, but then the swings start to come a little bit deeper, and you see how this high is only narrowly higher, and then we come back to the last level of support. We see the right shoulder on this head and shoulders, and then we come down here to form a double head and shoulders. As price slows down, we can start to anticipate a reversal, and that's when we look for the break of this trend line. So we see the break of the trend line. We also have a second trend line connecting the previous two lows. We have the break of the trend line, then price comes back to the last level of support. At this point, we look for our technical factors to anticipate at which point the right shoulder may form. And in this case, we have backside of that second trend line, but you see this base level of support here. That's important, and don't take your eye off of that. In this case, I have not included Fibonacci. We have a section later where we will include some Fibonacci as well as some simulated scenarios. Then we see the fall. We come through the neckline, then price comes back up, tests the neckline and this level of support, and I love it when it does that. It just gives me further confirmation that we're in for a down leg. Then we see the down leg. Price comes up uncomfortably through this level and consolidates up here. But what it does again is it's a head and shoulders within a head and shoulders. Or sorry, the outside head and shoulders. Here's the left shoulder. Here's the base of support, rally, right shoulder. Doesn't quite get to the equal point of the left shoulder, and retracement. Or sorry, and a fall. Real nice hammer here. If you were to draw a Tom DeMark trend line here, it almost touches it. And here's your double head and shoulders. We have the inside head and shoulders and the outside head and shoulders. You'll also see head and shoulders that look like this, and we have a real nice steady uptrend. We see weakness at the high. Price comes down. Here's the last level of support. Price drops below the previous level of support. The deeper this goes, the higher the probability we are going to have a reversal in the trend. The market goes back up, and one of your key levels of support should be this one here, which provides resistance to the market. And this retracement here is likely a 38% retracement. And I would be willing to bet that this is a 162% extension. Another 4-hour chart. Now, this 4-hour chart, we see price moves. In this case, it doesn't slow, but it's actually moving. It takes its, you see this deep retracement right here? This parabolic move after the deep retracement can get very, very heavy. The higher it goes, the heavier it can get. And we see a nice railroad track. But don't get me wrong, I'm not a real fan of railroad tracks, but this is a 4-hour chart. And once we see price moving below this base level of support, that's bearish. We come down to the last level of support. Price rallies. The right shoulder is quite close to the left shoulder, to being equivalent. And we see some nice confirmation candles here and here. Nice confirmation candles. But what I want to say is this, is that price breaks through the level of support and comes back and tests the backside. When you see a head and shoulders formation coming to fruition on a 4-hour chart, then when you're trading intraday on your smaller time frames, trade in the direction of the larger time frame head and shoulders, because it will generate a powerful move, and you'll be trading in the direction of momentum and probability. This is a 1-hour chart, and you see this high right here. This is so cool. It's the last daily high, and price comes up, tests the daily high. That in and of itself is a trade. This one you could have gotten in right at the head. Price falls. You see how the base of support is lower than the previous. That makes the market very heavy. That makes price heavy. So these bulls have got a real task. You need to generate a lot of flows, to push price up above this high now, after we've come deep through this level of support. The right shoulder retraces, looks like about 62%, and then falls. You can read through this on your own, because some of the things I'm going to be discussing. Look at this slide. It's a 15-minute chart. And the reason I put this slide up here is because what is your view? Is your view, if are you just looking at a consolidation, like a choppy price action, kind of a sloppy chart that's difficult to trade? This chart actually makes sense to me. And what makes sense about it is we see this price has been rallying. It's been making higher highs and higher lows. And here it starts to slow down. And then it makes another attempt at the high and fails. And price immediately starts trading below the previous day's high. And then it comes down to the last level of support. It's a few pips away. Now we're looking for potential reversal. So we see here the trend line connecting the last two lows. Price comes back up, tests the backside of the trend line, and we're at the top side of the pivot point. And this 120.75 was M3 for the day, and so we had this turning point at M3, and then price fell down past essential pivot to support 1. But what I want you to do is I want you to see behind the candles. I want you to see that as money is exchanging hands, the top side is getting weak here. This is a weakness for the bulls. Another 15-minute chart just to give you some insight on price action. This looks like kind of a narrow consolidation, and it is. But look at price. Look at the attempt to move higher and rejected. Look at the hammer, attempt to move higher and rejected. Right? And this is late Asia, early London session. Actually, this is kind of late Asia, and then this here is early London. And when early London comes up and does this one, you don't have to trade it in here if you don't want to. There is a trade in there, but you can also trade when it starts to run away using your ideal trade entry rules, of course, which could be this one right here. See this level of support? Price fell through and then came all the way back. 30 to 60 is about 35 pips all the way back to test the support and then continued down. Again, the market is making sense all the way down. It makes sense. Again, some notes for the following chart. And we have a head and shoulders base here. Sloppy as it may look, it is a head and shoulders base that forms. And right here, price rallies past the last level of resistance here and here. We see a tweezer bottom. If you trade the tweezer bottom, take profit immediately because price could come all the way back before it starts its move. This is kind of a consolidation type head and shoulders, again, as we've seen. But again, look at the previous high over here. Price attempts to move above the high. MACD divergence. It comes down to the last level of support and then jostles around a little bit while waiting on an economic report. Daily chart, head and shoulders, and the right shoulder is equivalent to the left shoulder, but look how deep the base of the right shoulder is. That is heavy. It's very weighty at this point. Then we see head and shoulders on head and shoulders.